Guys, we're going to start. Good evening, everybody. Thank you for joining us this evening. We're going to get started in the interest of staying on time and with calendar. For those of you that are online, welcome and thank you for taking the time to join our webinar tonight. And for those of you in the room, thank you for coming in person. And we'll try to make this as interactive as possible across two mediums. My name is Will Meikle. I'm a certified mentor with SCORE and have been for the last 4 years. I truly enjoy this organization, and I hope that I'm able to bring some insight to you on this topic this evening. Just by way of background, before I put up the charts, I have spent my entire career in finance and operations at a major technology company. So I feel pretty qualified to talk about this subject of managing money and finances with you this evening. But we will jump into this and get things going. So I'm going to share my screen. And by the way, if you have questions as we go through the material, please put them into the Q&A at the bottom of your screen. And I'll pause periodically to see if there are questions as we go and try to answer them. Tonight, we're here to talk about the basics of money management for a small business. If you were here or we had everybody on screen, the one question I would ask is, how many of you started your small business or are about to start your small business and have a love of finance and bookkeeping? And the answer typically would be maybe one hand would go up. And that's not unusual. That is not the passion by which you got in, obviously, other than you did want to make money, but you don't want to manage it day in and day out. And so we're going to talk a little bit about that tonight and why it's important. Let me just show the agenda for the evening. What I want to do first off, though, is I want to start with an overview of SCORE, because some of you may not have, this may be your first experience with the SCORE organization. I'd like to give you some more background and perspective on that. Secondly, we'll talk a little bit about the benefits of managing money and why it's important, not just for you and your personal life, but also as a small business owner. And then we'll go through the key topics within that around budgeting, importance of bookkeeping. We'll talk about 3 of the most important financial statements that you could have and want to be comfortable with. And then we'll talk a bit about business financing, because ultimately many small businesses want to prepare themselves to go to a lender to have some capital so they can start or grow the business. And then we'll wrap it up. One thing I do want to acknowledge our corporate sponsor for this event this evening, Union Savings Bank of Danbury. It's been a great partner of ours in this geography. We are in the western part of Connecticut, just for those of you that are across the country. And they are helping us bring programs like this to the small business community in the western part of Connecticut. So our big thanks to them for hosting us this evening. So as I said, let me talk a little bit about SCORE and what we are. So for those of you who are not familiar with SCORE, and I do find that many people are not aware of the services that we have to offer. But we are an organization of over 10,000 volunteers across the country who are here to help small businesses grow and develop and get started. These 10,000 people are from all walks of life, have all different types of experiences, some in small businesses, some in corporate, and have just a desire to give back to the community. And we've been around for 60 years. In October, we celebrated our 60-year anniversary. And it's really just a tremendously productive organization to be part of. What do we do? So first off, we have really 3 offerings that we bring to the small business community. The first is what we call business advice or mentoring. This is where you could sit down with a mentor, one-on-one, or 2 mentors at a time, to really help you through the process, through the journey of small business ownership. And they can help you along the way in terms of questions you might have, things you want to be careful to avoid, and they'll just help you along the way. The thing you should know about that is everything in that arena is free and confidential. So when you're having a mentoring conversation with myself or one of my colleagues, you can rest assured that you're not going to cost you a cent. And secondly, if we have a conversation about your business or your personal finances, it's not going to go any further than that conversation. So confidentiality is very important to us. The second thing that we do is what you're experiencing this evening is business training, education, and workshops that we run on virtually every topic that you can imagine a small business owner might entail. Again, everything you do is free. There are a few places across the country where they charge a nominal amount to join, but that is more the exception than the rule. But most often the things are free to join. We do them both webinars, like many of you on the call this evening. We do them live and in person, and we do some that are recorded and you can watch them on demand when it is most convenient for you. So when you wake up in the middle of the night worrying about your business, you can't get back to sleep, and you want to watch a webinar, click on our on-demand services, and you can watch that instead of reruns of the Brady Bunch or something. The third thing that we do is we have a library of free business templates and resources, whether that's business plans, financial templates, all types of instructions on how to form a limited liability corporation in the state that you're a part of, et cetera, et cetera. And those are all accessible to you. When I wrap up this evening, I'll show you how to find out more information about all those three offerings and how you can get access to that, as well as Quest Mentors help us. So let's jump into tonight's subject, which is money management. So, the goal of money management is really just about helping to make you more informed as a business owner or entrepreneur to understand things that we believe will help make you most successful. So it's all about understanding your financial situation so that you make good decisions as you move forward. And by the way, we love for these conversations with many small businesses to happen before they start a business. Now, oftentimes we don't get involved with a person until they're already up and running, but given an opportunity, we would love to be on the ground floor with a company when they're getting formed so they can set these basics in place from day one. But we think it's important to understand your business so that you know the profitability of what you are generating and where your incomes and expenses are coming from. Secondly, we believe that having a vision for the growth that you expect to drive is really important. One, because it gives you a sense of reality of, can I really make this venture work? Is it going to generate enough income for me that I expect to live off of? Or is it more of a hobby that if I make some money, great. If I don't, it's not the end of the world. That depends upon your own personal objectives and goals as you're running your business. I also think understanding your financial situation better really allows you to develop plans for the future on, am I going to grow? Do I want to enter new markets? Do I want to put a second business location in another city? Do I want to bring different and new products to market? So it'll just help you along that journey. And lastly, and this is often what most people come to us for, is getting prepared for a loan or asking for money from someone, be it in the form of a grant or a loan. But a lot of the things we're going to talk about, you may not have experienced yet, but if you go to any lender or most grant organizations who give out funds, they're going to want to see some basic fundamental financial statements from you. And again, that's not your core expertise. That's not the reason you got into business, but that's the core expectation from those organizations. So it will really help you prepare for that journey. So the first one I want to talk about is budgeting. So you probably hear this in your own life. Do you have a personal budget for your home, your family life? Many people don't. But it's not a bad idea to have something like that because it really gives you an understanding at the simplest level of all the income that you're taking, but all the things you're going to spend money on in the form of expenses throughout the month or year or quarter, in what period you're looking. It's really just a tool to help you understand what your business expenses are. When things are getting a little tight, it'll give you some indication of what levers do I have that I can exercise in terms of pulling back on expenditures, or if things are going well, what might I want to extend further into? It will allow you to plan your future in terms of growth and expansion. And it will be a tool that will really help you understand if and when am I going to make a profit as we move forward. So I'm a big believer that budgeting is important. The other thing that it does is it gives you something to drive towards as you move through time. I think it's important to have a goal or some barometer to measure your progress as you're going month to month, week to week, quarter to quarter. And I think a budget can be a good test case for where you are and what you can do moving forward. Bookkeeping. It's really, really important that people understand where all their money is coming in and where it's going out, and you do it in an organized and structured fashion. One, because it's really important for you to know, because at the end of the day, you're in this business to make money, so you need to know where the money's coming in and going out. Secondly, it's fundamentally important to know this because at the end of the quarter or the end of the year, you're going to have to file taxes. And if you're not organized, that's going to become a monumental task, as opposed to something that should be just simple as filling out forms. So it's an organized way of tracking income and expenses, and it's something that absolutely has to be done. Now, I'm not going to tell you you have to do it with a very fancy, sophisticated piece of software. I'm not going to tell you you have to go hire a CFO or an accountant. You can do this yourself. Truly can do it with the shoebox in the corner if you want. But as your business grows and gets more complicated, I think there is a place for some level of sophistication in this space. So a couple of things to think about as you're setting up a bookkeeping process for your business. I do think there's benefit in setting it up with a piece of accounting software. Now, there are accounting software that you have to pay for, and there are some that are free. And I think you just need to understand the level of complexity that your business is in and which one's going to suit your needs. The one most people are most familiar with are QuickBooks. QuickBooks is a very sophisticated, great program. It does cost money. Each and every month you have to pay to keep access to that software. And in some cases, if you're really small and really starting out, it may be more than you need. But if you have plans to grow quickly and there's a level of complexity in your business, I would encourage you to think about a complex piece of software like QuickBooks. But there's many others out there. If you go out and Google free accounting software, 10 of them will come up, and they're all terrific. Second thing I always tell my clients when I'm mentoring is you need to set up a separate business checking account, separate from your personal life. Part of the things when you set up a company is you really want to distinguish and keep separate as much as possible personal life and your business life. And starting that out with a checking account is really important. Thirdly is make sure that not just that you have a checking account, but to actually, do the fundamentals of that. Reconcile it each month when you get a statement so you know what's outstanding, what haven't you might maybe reported, things of that nature. The other thing is I think it's really important to track your sales. Obviously, you understand when somebody buys something from you, whether it's a good or a service, but you want to keep track of it from a couple of points of view. One is you want to know who it's coming from. Ideally, I think you'd like to know, how did they find you? Because it will become better indications of what marketing and sales tactics that you're doing that are generating clients coming to you to buy stuff. So I think it's important to try to diagnose your sales activities as much as possible. Fifth, every time somebody pays you for services or goods that they put into this business checking account that you form, put every dollar through there. I know many times there's a desire in startup businesses to put some of it in and put some of it directly in your pocket. And while there's an advantage to that, I'm not going to encourage you to do that because of tax implications of avoiding taxes. But the other thing I'll tell you a war story. I had a client come to see me about a year ago. They have been in business for 35 years. Very successful electrical contractor who had been renting basically a garage for 35 years to store all his equipment and vehicles in. And he finally decided he didn't want to do that anymore. He wanted to add a garage onto his home and do it right there and bring the value of his home up at the same time. Wonderful idea, great idea. He went to multiple banks with that idea and proposition. It would have cost his business less to do that than rent. The problem was all his financial statements did not reflect what the business truly generated because he put some of it in his pocket every month. And therefore, the financial statements, when he showed them to a lender, didn't support a loan. So there's advantages and disadvantages to putting stuff directly in your pocket. So I'd encourage you to run it all through, highly visible, and go through that process. Make sure when you are writing checks or charging things that is all around this business checking account, but also if you find a desire to have a regular credit card for business use, get a separate credit card for your business as well, for the same reason, just to keep everything as separate as possible. And at the end of the day, we're going to talk about a profit and loss statement shortly, but everything's going to reflect on there. All the income you brought in and all the expenses that you've incurred as a business. And lastly, I don't think you'll forget this, but don't forget to pay yourself. You know, you're in this business to make money and pay yourself what we would call an owner's draw, which is essentially paying yourself at the end of the day out of the profits in the business so that you can bring forward what you need to live on from a personal life. Any questions in the Q&A at this point? No? Okay. We'll keep going then. So I talked about money management software earlier. You don't have to be an IT technology person to use many of these programs, and they are an easy way to help keep yourself organized. And it will take care of a lot of the simple, mundane accounting tasks that are necessary, both in terms of keeping track of your income and your expenses, but also some of them will allow you to invoice your clients and give you an understanding of what's still outstanding in terms of people paying you, as well as vendors you might still owe money to from an accounts payable point of view. And they'll just help you track the health of your business. They will create many of the financial statements that are necessary in a business that we'll talk about in a few minutes here. Yeah. So the question that was just asked was, what happens if I don't pay myself, and how will that affect the tax implications of your business and your personal? So typically, it's not going to have a dramatic impact on your taxes because the way most small businesses report their taxes is they combine their personal income life and their business life together to form consolidated tax return. And therefore, the taxes at the end of the day, whether you do or don't take the money out of the business, won't change that effect. But you need to have some cash in your pocket to run your business. Um, I do encourage you not to use paper, to not run your business software in the shoebox in the corner. If you're really starting out, you're small, maybe you're doing a craft business on the side, only at evenings, and it's really a side part-time job, you can probably do that. You can probably do that. But if this is a full-time employment for you, and I think it's important to have a piece of application software to help you. Now, we'll talk about outsourcing things. This is a great example. If you don't like doing this, secondly, you don't like technology or applications on your laptop or phone, but you know this needs to be done, you can hire a bookkeeping firm by the hour to help you do this. You're not hiring a financial person. You're not hiring a dedicated 40-hour-a-week person. You can do this with part-time bookkeeping. There are businesses out there who will sell their bookkeeping services by the hour. I happen to have another volunteer activity that I'm a treasurer on, and we have a bookkeeper who supports us 10 hours a week. And that's more than sufficient. And she does everything from invoicing to collection to simple bookkeeping, record keeping. So if you don't have a love of this, and you feel like you have enough money in the business to support this, find somebody to help you do this and pay them. Okay. Financial statements. They're kind of an important part of running a business and helping you understand your financial position and how healthy you are from a profitability point of view and a cash flow point of view. So from my perspective, there are three basic financial statements that you should be familiar with and have an understanding of. And if you do use one of these softwares or hire a bookkeeper, you should expect to see these three on a periodic basis, at least once a quarter, if not every month. The first one, and the one that most people are most familiar with, are profit and loss statements. We'll talk about them in a second. They basically are exactly what they say. Tell you whether or not you are making or losing money in your business. And they are an aggregation of all the income that you receive and all the expenses that you incur. And when income exceeds expenses, it's profit. And when expenses exceed income, it's a loss. So we'll talk about that in a second. Second one is a cash flow projection. So think of this as a little bit more of a reflection of your bank account. So you put money in, you take money out, that's cash flow. So it helps you understand what you have either in the bank or on hand to pay invoices and to generate income. It's important to know this as you look out in time, because what you want to know and what you want to avoid is, am I going to have a shortfall in cash 3 weeks from now? Which means if you have employees, you can't pay them, you can't pay your payroll, or you can't pay your vendors if you owe people. It's important to know that ahead of time before you get to that crisis stage, because you can do something about it at that point. You can potentially cut back on some things to save cash, or you may be able to go to a lender and say, I need a line of credit just for these ups and down periods that will allow me to weather the storm when cash flow is not even. This is really relevant, particularly in what I'll call seasonal businesses. Businesses that have a big spike or drop around the holidays, things that are only work in the summer, not in the winter, or vice versa. They have to be very careful about cash flow. So it's important to understand. The last thing is a balance sheet, which really identifies what are those things that I own, called assets, and what are those things that I owe other people, like liabilities. We'll talk about that one. So a profit and loss statement, this is the one financial statement that most people are familiar with, because it's the reason they got into business was to generate revenue or income from selling goods or services to customers, and it tracks all of the expenses that you're going to incur as you run this business over time, whether that's rent, salaries, marketing expenses, IT, phone costs, whatever they are. Important to capture them all so you have a very good view of profitability and whether that business is making money or losing money. By the way, it is not at all uncommon for businesses to lose money in the early stages of their formation. You start out, nobody knows who you are. Nobody knows that you're in business. So you're not going to generate the level of sales you might think of initially, but you may already start to incur, particularly if you have to, say, have a storefront or you're a restaurant. You need a place to do business out of. So you're going to have some expenses up front before you start to generate a lot of revenue. So it just really helps you understand the profitability as well as when am I think I'm going to start. And I always think it's a good step when you first start a business to understand what do I estimate all my monthly expenses to be? And therefore, how much revenue do I need to generate from selling goods and services to customers? And then to stare at that number to say, how many customers do I have to find every month to generate that much revenue? Is it 10? Is it 50? Whatever that number is, step back, look at that number and say, is that reasonable? Do I think I can do that? Or am I going to lay awake at night every night realizing I can't find that many customers? If that number gives you heartburn, you might want to pause and do a little bit more thinking about the formation of your business till you have a better understanding of that, just to avoid some of these problems. Catherine, any questions out there? Nope. Okay. All right. Cash flow projection. This is the one that I said, think of this as having a really good understanding today of where you are, but also out in time. Think of all the money that flows into your business checking account and all the money that flows out of your business checking account. And kind of understanding that on a go forward basis, what's out in front of you. So I think it's a great idea to think about projecting what is it going to look like over the next 3 months at a minimum, maybe 6 months or more. Because just to understand the ups and downs that happen in cash flow. Because as I said, if you really project, look out in time and say, I'm going to be short of cash 3 months from now, I need to do something. I need to find a way to find a whole bunch of new customers really quickly and get paid, or cut back some expenses, or I need to maybe either put some more of my own money back into the company or potentially consider going to a lender for a line of credit that will help. It really will help give you insight before you are upon an episode where you are out of money. You can't pay anybody. You don't want that to be the case, obviously. The last one I'll talk about is a balance sheet. So a balance sheet is a snapshot in time. Unlike the other two statements, which you can look at for a quarter, a year, a month, whatever, a balance sheet says, as of today, what do I own? Which are the assets? And what are the liabilities? What you'll see on the bottom is a really simple example of a balance sheet. So it says, from an asset point of view, what are the things that I own? Well, I have $10,000 in cash sitting in the bank. I've got equipment that I've purchased as I formed this company worth $25,000. And I've got $20,000 worth of inventory for things that I sell to my customers. So overall, I have assets of $55,000 in this example. On the right-hand side is what is it that I owe? So liabilities are debts that I owe to other people. That may be I owe this to the power company for my electricity, or I may owe a mortgage on a building that I own, um, things of that nature. And then what's left between those is what's called owner's equity. That is essentially the amount of um, value that this business has generated that is still available for you to take out of the business should you want to. So I asked you to think about it this way. Probably many of you on the phone or on the webinar um, own a home. So think about the asset is you go out and you buy a house and it's worth $250,000. But to get that house, you went to the bank and you got a loan for $200,000. So you have an asset worth $250,000. You have a liability owed to the bank of $200,000, and you have equity in your home of $50,000. That example is one that most people can relate to. Balance sheet is that same articulation of that for all the assets and liabilities that you have. Now, many people at some point in their small business life or large business life will have a need for business finance, whether that's because they want to start and they need to acquire things to get started. They have reasons because of ups and downs. They need to operate, that they're going to need some additional financing, like a line of credit, as I described. Or they have expansion plans where they want to grow the business. They want to put some more capital into the company to help it grow. There are really two types of financing options in front of people. One is equity financing, and the other is debt financing. Equity means you find a partner who wants to invest in your company and gives you money. They do that by taking a piece of your company, taking a partial ownership or equity in your company. The other alternative is debt financing, which is you go to a lender and you ask for a loan that you will pay back over some period of time. Those are the two most common financing concepts. There is a third, which I don't want to gloss over, called a grant. And that's where somebody just outright gives you money and doesn't expect it to get paid back. You know, those are wonderful. They're like the best form because you don't have to pay them back. But there's not a lot of those. They're usually very targeted to specific situations, either in specific industries, specific areas that are underserved, or specific situations. The other thing is there is financing, what I'll call for working capital, and there's financing for fixed assets. Let me simplify that. Working capital it's like what we talked about with cash flow. I need money that I need sometimes, but not all the time, to pay my bills on a regular basis. Seasonal patterns go up and down. As your sales fluctuate up and down, you may need working capital just to keep things going. Versus I need to go out and I need to buy a major piece of equipment or a building or land. Those are typically fixed assets that have a long period of time to be paid back and have a different level. So as you're talking about financing, whatever form it is, a couple things you need to think about as you go through that. One, you are going to have to invest your own money in the start of a business. Nobody, I've not come across them yet, will ever give you 100% financing for what you need. Nobody that I know. They want to make sure that you're personally invested in the success of this operation and that you're not fully relying on somebody else to back you. So they're going to want to see your personal commitment in terms of, I'm going to put 20% of my needs in out of my own savings or investment. Secondly, most people aren't going to lend you money unless they have a vision that this business is going to be profitable and that you can generate enough income to support paying back loan in particular. And even if someone comes in from an equity point of view, they're investing in your company because they're expecting it to generate money so that you can give some of that money back to them in terms of owner's draw. So profitability is important, that you understand it and have a vision for when it will become profitable. Many times I've found when clients are engaging with a lender to understand, the lender wants to make sure that you understand your financial statements, that you understand your needs short term in terms of working capital, and that you have a good understanding of matching the sources of where your money comes from and where it all goes. So it's not always obvious, but in a conversation with many lenders, in terms of looking at your financials to understand them, they want to make sure that you understand them as the owner of the business. You didn't have some, friend or family member on the side do them all for you, and you have no clue what they did. So it's important that you understand them as the owner of the business. Want to make sure you understand the financial statements, how they work. You'll often be asked for a P&L, cash flow statement, and a balance sheet when you go in for typical loan. And as I said, they want to make sure that you're invested. So you may be required to put some of cash in, but you also may be asked to, I can have collateral applied to. So typically, if you go in and you want to, let's just make an example. You want to buy a new truck for your business. You're going to put in some amount of cash directly yourself. You can't get a loan for it. Also, their collateral, meaning they're going to attach the loan to that vehicle so that if you don't pay, they have the legal right to come take that vehicle back, sell it, and pay off some of the loan. Same thing with a house. When you bought your house, it was secured with a mortgage, which is a fancy different word for collateral, meaning they have the right, if you stop paying on your house, they're going to come take your house. So that's just classically how things work in this company, in this country. You should understand the risks and costs of whatever loan you're looking at. There are lots of different loan products out there and opportunities, and you need to understand them. Some have very low interest rates, some have high. Some have a lot more fees associated with them, some don't have any. So make sure you understand that. If you need help with that basic understanding, come ask a SCORE mentor. We can help you understand those things better. We don't actually have access to funds, but we can help you with the process, getting ready to go do that and just understanding it a little bit more. And do shop around. I mean, I always suggest people start with the bank or the lender that they are most familiar with, that's probably conducting their personal life with. Those institutions know you, they know what you do, they know what your track record is, and they're usually the most susceptible to helping you. And I do believe, no disrespect to the big national banks across the country, but local banks, community banks, regional banks tend to be a little bit more small business friendly and accessible. Doesn't mean the large banks nationally don't care about small business. I don't mean that. But they have a large set of corporate clients that they are worried about. And I do think it's important to look for it. And as I said, if you need advice, there's lots of organizations out there to help, but certainly SCORE's there to help, Small Business Administration's there to help, your local bank that you're familiar with or credit union is there to help you. There are other organizations like the Small Business Development Center and Women's Business Development Councils across the country that can help you with the process. So if you decide that you are ready to move forward and are ready to ask for a loan, what are some of the things you're going to want to know? First off, you are going to need what's called a business plan, as well as a profit projection, typically at least for the next 3 years. What is a business plan? Business plan is a qualitative written document that talks about what your business is, how it operates, what you sell, how you market, and how you essentially operate that business or plan to operate that business. Profit plan is a manifestation of that in terms of dollars and cents. So what does my business profitability look like over the next 3 years that I am committing to in terms of supporting getting a loan? Hardest part is item number 2, which is really know what you can afford. I mean, it does no one any good to put a set of unrealistic financial projections in front of you, in front of the bank to support a loan that you can't then pay back. So make sure you're comfortable in understanding where your business is going and what you realistically and conservatively can afford, be willing to pay back. As I said, understand your financial statements, get some help so that you make sure you can articulate the ins and outs of those well, because you will be asked about them, and they want to make sure you truly have an understanding. The fourth one is know your credit report, know your credit score. It's important because some institutions will only start with a credit score of X, or others will start with a number higher than that and lower than that. So it's important to understand your credit score, but also if it's not as high as you think it should be, really get your credit report and understand what's on it. Because there may be some things on it that were really from a long time ago that you thought were behind you, but they aren't yet. Or there's some things on there that are wrong and aren't you at all. So knowing those and trying to understand them and fix them ahead of time will serve you well before you do. As I mentioned earlier, understand if you get asked, what can you put up for collateral against the loan, you know what you have at your disposal. And know how much you're going to be able to put in yourself in terms of equity contribution. How much am I personally going to invest into this business or as part of this loan process? I have a client who needed to go purchase a $50,000 piece of equipment. They have been running a business for many years, but they needed another piece of equipment to kind of take them to the next level. They couldn't get a loan for $50,000, even though they've been in business for a long time. Not because they couldn't support it, but because the lender said, no, we're not going to support 100% of that purchase. We'll support 80%. You need to put in the last 20. So they needed to put in 10,000. That's pretty typical, not an unusual situation. And as I said earlier, really research your financing options. Lots of options out there. But first and foremost, I would suggest start with your local bank or credit union that you do your day in and day out transactions with. That's the right. Where do you look? Obviously, as I said, you want to start with banks. You want to talk about regional organizations that are there to help. They can help guide you to places to look. Most of these organizations that are on this chart themselves don't have funds. Some of them do, some of them don't. But they are useful organizations in pointing you to different places for you to look to consider getting a business. So let me just summarize, and then we'll open it up for a broader set of questions. I think money management is really important. Now, obviously, as I said at the beginning, I have a 40-year career in this space, so I might be a little biased, but I think as you get into this, you'll find that I think it's really important. And I think starting with a budget guide you and give you an understanding of where things are going over time is really good. Solid bookkeeping is the foundation for successful financial management, whether you do it yourself, whether you use a piece of accounting software, or whether you hire somebody to do it. It needs to be done, and it needs to be done regularly. Not once a year, but on a really ongoing basis. Profit and loss statement is really the best financial statement in front of you to understand when and where you're making money. Cash flow projections will help you understand if you're going to have any cash shortages in time so that you can take immediate action to prevent any shortfalls in cash that you may need. And before you move forward for borrowing, sorry. Don't just walk into a bank and say, I need money. And the first thing they're going to do is they're going to turn you around and tell you to go put a business plan together and a financial forecast. And many times they're going to refer you to organizations like ours. Yes, Catherine. So so the question that was asked was, where can I find a good template for showing cash flow projections? Well, that's one of the templates that we have in SCORE that's available to you free of charge. Now, before I just point you to a template, which I'm going to show you in a second, I would suggest if you're getting to that point, reach out and schedule a time with one of the SCORE mentors, walk through that process. Because if it's the first time you've used a cash flow projection template, you may not really understand it. Let us help you with that journey. Let us help you understand it and help you go through the process of preparing. At the end of the day, it's your template to prepare, but we can help you with that journey. And I would encourage you. And if you'll hold for one more chart, I'll show you how to do that. But understand your situation before you just walk into a lender and ask. Have a good understanding of your business plan that you can articulate simply and easily to people. Doesn't have to be a complex document. It can be 3 or 4 pages. Doesn't have to be 35. I've seen business plan templates that are 35 pages long. People's heads are about to explode before they even start to fill it out. We have some simple ones that can help. Understand your credit score, how much money you're going to put in, and really get comfortable with how you feel about ability to pay that. So let me just end with the last one. So I told you wanted any help. So on this chart, you will see at the top, www.score.org. That is the simple way to get access to us and the 10,000 resources that we have across the country. On the left-hand side where it says Western Connecticut, that's not going to say anything. It's going to ask you to just put in your zip code, and it's going to point you to the nearest office closest to you and suggest that you get connected through that meeting. In the box at the top with the red around it, that we offer. Finding a mentor for business advice and counsel, workshops and events. You probably went there to register for this event, and templates and resources. So if you feel like you're on your own and you're ready to go, that question on cash flow projection, you can go right to that templates and resources. You pull up a search box, you put in cash flow, and it'll pull up some templates that you can select from. On the lower right, it shows request a mentor. If you are looking for help around your business, whether it's a startup, growing it, or exiting it, if you're at the point where you're ready to sell your business off, you can go in there and ask for help. And you put in your zip code, you answer basically 5 pieces of data, your name, your phone number, your email, what help do you want? And within 2 days, 3 days at the most, usually, a mentor will be assigned to you and reach out to you to try to schedule a session to talk about want help. And if you're up in the middle of the night and you can't really find anybody to talk to and you need somebody to talk to, on the bottom, chat with us. You click on that, you'll actually get connected through our online chat mentoring, which at times is manned by people, and at other times it's manned by a bot. So, and I've been on both sides of that. I've mentored online and not. So, but if you really have a question, you can maybe get it answered right there. So, thank you all for joining. I appreciate your time and effort. I'm going to pause to see if there's any more questions. We will be sending out a replay of this as well as the slides themselves for future reference. Probably should have told you that at the beginning before you took all the notes. But thank you for that. And don't hesitate to reach out to us. We'd love to help you with your small business journey. And make sure you're taking care of your financial situation as you move forward. Any questions? No? All right. Thank you guys very much. You all have a great evening. Thank you very much.